There's a startling similarity between the US stock indices and natural gas, and I'm going to tell you a little bit about it now, and then I'm going to record a video tomorrow to explore this a little bit deeper with you. If we have a look at the S&P index, you'll notice that we're struggling to get through this yellow zone over here, which I've referred to as the wall or the unbreakable barrier. And just beneath us, we've got all these moving averages, and we're kind of stuck in between them. That's the 50, 100, and 200-day moving average. The big question is when it comes to US stocks and the dollar index, which we see here right down at these lows, and natural gas that we see hovering around still just above the $2 level, is whether the bears are going to capitulate or not. I'm referring specifically to the bears because even though natural gas is right at the lows on its chart, and the dollar index is right at the lows on its chart, and the S&P is actually right at the highs on the chart, is whether the bears are going to give in. Now, there are two scenarios that can take place here, and I'm going to put them all together in the same basket because the same question remains and the same question covers all of them, and it is surprisingly similar. We know, for example, in the stock markets, there's a lot of short interest building, and if we have a look at the COT reports and various options reports, we can see that more and more short interest is developing in the US stock market, and that goes across all of the major indices, the Dow, the S&P, the Nasdaq, and the small cap indices, and it also goes for individual stocks such as Apple, Microsoft, Nvidia, and so on. Despite this developing short interest in all three of these markets, the US stock indices, natural gas, and the dollar index, they are persistent in not moving lower. Natural gas is stuck just above $2, the S&P is stuck just below 4,200, and the dollar index is stuck just above 101. Two things can happen when there's such a buildup of short interest. The first scenario is that the bears will capitulate, which will mean that the Nasdaq, the Dow, the S&P, etc. have to rally to new highs, stop out a lot of short positions, and refresh and reload with new short positions. The dollar index in that case will rally and stop out some of those short positions and move to new highs where shorts can reload, and the same for natural gas. The short side won't prevail and the markets will move higher, and the bears on natural gas will have to give up as the market moves higher. That's the scenario of capitulation. The second scenario is that the bears will actually win, and that the overwhelming inflood of bearish hands, bearish positions, bearish options, and so on will overcome the long hands in all three of these markets, and we'll see the S&P move down and eventually collapse, perhaps down to 3,800 and even last year's lows. Natural gas will just collapse down to $1.80 and then $1.50 and potentially even lower, and the dollar index will collapse down through 101, and we'll see new recent highs on the euro and the pound and the yen against the dollar. There's a tendency to believe that if the market becomes overwhelmingly short across a variety of instruments, that eventually those shorts will have to capitulate and we have to move up higher on the chart. That is not always the case, of course. Sometimes the sheer weight of those bearish positions, the bearish sentiment, the realization that the news and the Fed and interest rates and inflation and banks collapsing, all of that sort of thing overwhelm the long positions, and the markets begin to move lower. What was very interesting on Friday was that despite unemployment being at something like a 60-year low and a succession of incredibly high non-farm payrolls reports, the dollar didn't manage to rally very high. The stock markets didn't manage to move down. In fact, the stock markets ended up the day bullish, and natural gas kind of stayed more or less where it was after forming a spike low the day before. Now, these markets, even though they've got the dollar in common, they're not the same markets, they're not going to behave in the same way, and they're not going to move in the same direction or react in the same manner. However, it is interesting that we've got overwhelming short interest in all three markets. Even though the stock markets are at highs and the dollar and natural gas are at lows, there's overwhelming short interest trying to drive all three of these markets lower. I'm going to explore this on Sunday night, so watch out for my video. And if you haven't subscribed to this channel already, why not just press the subscribe button so you don't miss Sunday night's update. I'll see you there.